Welcome, everyone. I know there's some people online, as well as you folks, so thank you for coming in. My name is Cheryl Peterman, and I've worked here at the credit union for over 20 years. I've been in the mortgage industry for over 30 years, and I really enjoy what I do. And this is kind of a question and answer seminar, so if you have questions, the folks online, please type your questions in. And the folks in the room here, if you have questions, just let me know. I'm happy to help. So I've written down a few questions that folks have asked me over the years. One of them is, what is PMI? PMI is private mortgage insurance, and it's required on a loan if you have less than a 20% down payment. 5, 10, 15% down payments, that PMI gets a little lower with each 5% you put down into it. And the PMI automatically falls off your loan when your loan hits 78%. If you feel you've reached 80%, we can pay for another appraisal and see if we can get that PMI removed for you. We have several, yeah, go ahead. Okay.
So, from Devin, when applying for a home mortgage, do lenders base your mortgage off of the lower of the two credit scores?
Yes, if you're applying with a co-borrower, the interest rate is based off from the lower of the two scores. So if your score, we'll say, is 750 and your partner's score is 730, the rates and the PMI would be based off a credit score of 730. Yeah.
Take the lower rather than the higher.
Right. And another question that's very common, what is a hard pull on my credit? So what a hard pull on your credit is, we check all 3 credit bureaus. We do a tri-merged credit report. So we're pulling from Equifax, Experian, and TransUnion, and they give us 3 scores. We're gonna use the middle score of the 3. So if your score was 720, 710, and 689, we would go with the 710 credit score. Some of the mortgages that we have available here at the credit union, we offer fixed rate conventional loans, which are a 10-year, a 15-year, a 20-year, and a 30-year term. We also offer a 5-year and a 7-year ARM loan, and we also offer FHA loans and VA loans for purchasing. Sure.
A follow-up to the previous question, and why is that? Why is the lower of the two scores taken?
You know, that's a very good question. That's basically just the way the industry does it, is they take the lower of the 2 scores. Go ahead.
Another question from Stacy. Can you talk about student loans and how they relate to the home buying process?
Sure, good question. Student loans. A lot of student loans have been not in repayment since COVID. So even though you have student loans, you're not making payments, we have to use the payments to qualify you for the loan. So we'll take the balance and take it times a 0.5, and that's the payment that we would use on to qualify you for the home. Some current interest rates. I get a lot of questions. In fact, I just had one before I came in. Last week, the 15-year was at 5.5%, and today it's at 6%. So it's gone up a half a point. So rates are subject to change at any time. we don't have any control over the rates. We don't know what the rates are going to do. I know a lot of people ask, what do you think rates will do? We have no idea. It's just, we get the rates and that's what we publish. Going into that, you can pay points to buy the interest rate down. So today, for example, the 15-year is at 6%. And depending upon how much it would cost to buy the interest rate down, sometimes you can buy it down by 1/8 of a point. So you would take your loan amount times 0.125, and then you would get an interest rate of 5.875 versus 6%. It's a one-time fee, and it's paid with your closing costs at closing. And sometimes it's tax deductible, but I'm not a tax expert, so you would want to check with your tax preparer to see if that's still a tax deduction for you.
The more you're willing to pay down, can you pay more than that? to pay
Absolutely.
down? So as much as you want to, one time only,
Right.
you could try to pay down, what do they call that, buy down rate?
Buy down the rate, yes. You can pay a lot to buy down to a smaller rate, but you also got to consider, you got to take into effect, is it really worth paying, $5,000 to buy an interest rate down to, for 0.5% or whatever. You got to take that into consideration too to see if it would be worth your while to do
So it's
that.
pretty expensive to buy down, then, it sounds like what you're saying.
It can be.
So they get their money back.
Oh, yeah.
If you want to buy it down.
Right. And like I said, we do not set the rates. The Federal Reserve sets the rates and the points and things like that. We do work with a mortgage company by the name of QRL Financial. And they basically set the rates and the points. So we work with them and they decide what rates are and what points are and that type of thing. But it can be sometimes points can be really good, sometimes maybe not so much. So it kind of all depends upon, rates change daily all the time, they're changing. So, you just never know what points will be and that sort of thing. And a lot of people do ask how much they need for a down payment. Your down payment, if you have less than a 20% down payment, you would have to pay the private mortgage insurance. So we can do as little as a 3% down, conventional, up to, whatever you want to put down. But the 20% down then you're out of the PMI. So if you can swing that 20% down, even if you have a 15% down payment and you have to pay a little bit of PMI, it's not as bad as you think. So it just kind of depends upon, the rates and how much you're putting down and so on and so forth. Some people have asked, and we get people from other countries, and unfortunately they don't have credit scores. You would need to have a credit score to get a mortgage through the credit union here. That's very important, your credit score. So always make your payments on time and really keep a good eye on your credit. Escrow accounts. A lot of people don't understand what escrow accounts are. Basically what an escrow account is, it's for your taxes and insurance. So when we go to close your loan, we're going to collect a year's worth of insurance up front, plus we're going to collect another 3 months to put in your escrow account for your insurance. And for your taxes, normally those are prorated. So if you're purchasing a home, normally those taxes would be paid by the seller, and we would collect about 4 months worth of insurance to put in your escrow account. And then when your taxes and your insurance comes due, we'll pay that for you. it's a really nice convenience to have an escrow account.
So we have a follow-up to the student loan question.
Sure.
So this person has an income-based for their student loans, and so I believe Dustin was trying to clarify. So do you calculate things off of the? Yeah, go ahead.
Yeah, so if they're on an income-based repayment plan and they're paying less than 0.5% of their balance for their payment based on that income-based repayment, do we still use the 0.5% or can we use the income-based repayment?
Good question. We can use, as long as you have documentation and you can give that to us, we'll use whatever your documentation says. Very good question. A lot of people do ask too about us pulling your credit. So when you fill out an application online, we are going to pull your credit, and it is going to be a hard pull on your credit. So meaning that we will check with all 3 bureaus. And that's something that we just do here with the mortgages. I think if you're getting a car loan, they only pull from 1 credit agency, but we pull from all 3 for a mortgage loan, for a first mortgage loan. I think home equity loans are a single pull. So, do you guys have any questions? Okay.
Not so far.
And another too, what does my mortgage payment include? So your mortgage payment would include your principal and interest payment. It also would include your taxes and your insurance. If you have a 20% down payment, you can waive your taxes and insurance, and they charge you, I believe it's either an eighth or a quarter of a point to not escrow. But for me, I find it very convenient to just include my taxes and insurance in with my payment. So when they come due, I'm not trying to pull money here and there and make the payments on that. Go ahead.
Yeah. So with the escrow with like taxes, so you bought a house 6 months ago and then you get an email or whatever, I assume for taxes being taken out for property taxes. Mm-hmm. Once that escrow account is empty, do you need to refill it or do you just pay it on your own, the taxes on your own?
Good question. So what happens is in Minnesota, taxes are due May 15th and October 15th. So let's say you're purchasing a home, you're closing April 30th. So your taxes will be prorated, meaning that they will be paid to the seller. The seller will pay them, and then when your first payment starts, if you're closing on April 30th, your first payment would start June 1st. And with that, we'll start collecting we'll collect 4 months right up front to put in your escrow account. And then when your payment comes due on October 1st, we'll have collected June, July, August, September, and October. So we'll have enough money to put in to pay those taxes. So every time your taxes come due, you should have enough money in there. Once a year, they review your escrow to make sure, because we all know that taxes and insurance go up. I mean, very rarely do they come down. So they're going to do an escrow analysis, and I've owned a home for 30 years, and I've always had to pay because my escrow account has been short. So I opt to make that extra payment into my escrow account so my payment doesn't go up a lot. I mean, it's going to go up a little, but I make that extra payment of whatever it is so my escrow account isn't short, and that's usually once a year.
Does anybody not escrow? Prefer not to escrow?
You know, there
I
are,
wouldn't think that anybody would want to run the risk of missing their payment.
right?
Or
Yeah.
not having the available funds.
There are folks that want to handle it themselves. And especially now that interest rates are on savings accounts are better, they're choosing to save that money in their own account and get that interest and then pay it themselves. So a lot of people, you know, there's probably, I'd say probably about 25% choose not to escrow. Yeah, I guess it would
I
be.
think it'd be that high.
No, it would be my choice to escrow just because it's easy, but yeah, there are folks that, you know, that like to do it on their own, and that's fine.
Yeah.
And a lot of, when people are purchasing, if they're closing, let's say you're purchasing a home, you're closing May 15th. So they say, you know, when is my first payment due? You always skip the next month. So if you're closing May 15th, we'd skip June, your first payment would be July. Now, if you're closing at the beginning of a month, so if you're closing on June 1st, your first payment would be due July 1st. So you don't, that's the only time you don't skip the payment. Sure.
Back to with the student loan question. Can you provide an example, or can you comment on this example? $50,000 in student loans, what is the 0.5 total used for? What is that used for?
That 0.5 is used as your student loan payment. So that would be the payment that we would use to qualify you.
Thank you.
Yeah, sure.
Can you talk a little bit about closing costs and what people may expect to pay based on their mortgage value?
Sure. That's a great question. A lot of folks are interested in how does the credit union make money. Basically, what we charge is our origination fee, and that's basically what we get paid to do the loan. And our origination fee is 3/4 of a point, and that's a part of the closing costs. Other closing costs are a credit report, an appraisal fee, we have a processing fee, we have a tax service fee, there's a flood certification fee, there's a lot of fees, verification fees, and then you get into title company fees. Here in Minnesota, we're blessed because we don't have a lot of higher closing costs for title companies and things like that. Whereas when you get down to Florida, they have a lot of state, city, county taxes, and the bigger house you buy, the more you're going to pay. So we're blessed here. The mortgage registration tax for the state of Minnesota is 2.3 per thousand. So it's not, you know, it's not extremely high, but like I said, Florida, their costs are pretty big there. And then the closing costs, actually, that's what you pay at closing. So that will be figured in with your down payment. And your down payment, of course, is going to depend upon how much you have to put down. And if you're selling a house, you know, a lot of questions about selling. Can we close on the same day? Can we close on our old house and purchase on our new house the same day? And yes, you can do that. You would just want to close on your old house first, so you take that money and you put it down on your new house. Go ahead.
Yeah, comment on that. Like, if I want to sell my house and buy one the same day, you know, can that money from my sale be like just immediately applied to the? So let's say I need to upgrade houses. I'm having a family and I need to go from a $300,000 house to a $500,000 house with more bedrooms, and I've got most of that first house paid off. Can I put that $300,000 towards the $500,000 immediately, like within the same hour? Or however?
Yeah. So how we would handle that is we would have you close on the sale of your home, so that $300,000 that you're getting from the sale of your home would go into your new home. So we'd have you close on the sale first and then on your purchase after that. And a lot of people do that. It happens all the time. And also some people, they want to just wait to sell their house and purchase the new one and have time to paint and, you know, fix up the new one and not have to move all in one day. So you can do that. And really what you can do is you can put a lesser of a down payment down. And then after you sell your home, you can do what we call a recast. And I believe the fee on the recast is $350. And what it'll do is our mortgage company will recalculate your payment down to the lower balance. So if you're borrowing $500 and you're getting $300 from the sale, they're going to recalculate your payment down to a $200,000 balance. So your payment will go down significantly. I know you guys have more questions. Don't be shy.
I just got a quick question.
Yeah.
You hear a lot now that, and I don't know if this is off the subject a little bit, but house inspections. And just an example, our next door neighbor thought they had their household, but then they had it inspected, and then all of a sudden they're fixing some things and up on the roof and so on. So do you have any feel for what the requirements are for a home inspection now, or how that works, or
Yeah, that's a
affects the sale? Because you see some of these houses, it says pending. You know, if you look them up online in Zillow or Redfin or somebody, pending, and then a week later or 2 weeks later, now it's finally sold, or
sure.
you know what I mean?
Yeah. Inspections are basically, it would be something that you have the option to do. If you want to do a home inspection, you certainly can. And sometimes you'll see the house has been pre-inspected. So the seller has actually paid to have a home inspection done. And a lot of people,
That's pretty advisable, huh?
you can do that, absolutely. Some people, though, want to get their own home inspection done by their own home inspector. Totally up to you. I think the cost, I'm going to say probably between $300 and $500 to get your home inspected. And that home inspector, he's going to start on the very top of your roof and go all the way into the basement and inspect everything. I mean, you get a report, and it's a thick report. My first house, I did a home inspection, and I'm so glad I did, because I would have never crawled up in the attic because it was all nasty and creepy. But there was a ball of live wire laying on the attic floor. So we paid to have that, or the seller fix that right away. But home inspections are totally up to you and whatever you want to do. I guess, you know, I think it's a good thing, but that's totally up to you and your call.
Do the vast majority of people now buying houses request a home inspection before they
Yes.
make an offer?
I'm-
It seems like
I'm going to say
more
probably,
prevalent now than
yeah.
years ago.
absolutely. I'm going to say probably like 85% do a home inspection. Yeah, I think it's, you know, just think about it. You're spending anywhere from $200,000 up to $1 million. Would you want to know, you know, about the house that you're purchasing, if it's safe? And, you know, I've seen it on the other side too, where home inspectors don't catch everything. So an example, my brother and sister-in-law and sister-in-law had a home inspection done, and everything was fine. Well, their basement started to leak, and they had big time issues, and they tried to go back on the seller, but you know, they couldn't do anything. So, you know, a home inspection isn't always 100%, but I would still, myself personally, I would do a home inspection.
I wonder, just out of curiosity, how many offers fall through because they find X, Y, and Z on your roof and basement, this and that and the other.
Yeah,
Fireplace isn't working, and so all of a sudden you say, oh, I'm gonna withdraw my offer on this house. Or the seller's gotta fix all of that
right,
before
right.
they agree to buy it.
Yeah, yep.
Is that pretty prevalent now?
You know, I just had one last week in Arizona that the deal fell through because there was, and she didn't share with me what was wrong with the house, but she just said there was a lot. And sometimes the seller isn't willing to pay for it. They just want to sell their house and they think they're selling it for a decent price. So, you know, it does happen where the deal does fall through. Sure.
Well, say somebody's been in their home about 20 years and they have some considerable amount of equity built up and they're looking to buy a cabin. What are some different options for financing for that cabin that they might be able to consider with that situation?
Good question. Typically, when you're purchasing a cabin, you would want to have probably, and I think you have to have at least 10% down. It might be 15 or 20, but the interest rates on the second homes or vacation homes are a lot more than what the regular first mortgage primary home is. So those interest rates are much higher. But as far as equity, if you have equity in your home, you can do, if you own your home free and clear, you can do a cash out refinance on your home that you're living in to pay for your cabin. But if that doesn't work out for you, we can also do a home equity loan to take some of that equity out to put down on the cabin. And the cabin has to be a year-round livable home with a main heat source. It can't just be a little heater or something like that. It has to be a livable property year-round, not a seasonal home. Sure.
Can you talk about like home equity loans and what does that exactly mean? How can they be beneficial? When are they a good idea? When are they not a good idea?
Absolutely. Home equity loans are basically what it is. It's you're using the equity that you have in your home. And what I mean by equity in your home is how much is your home worth? We would do, it's kind of like an appraisal, but I think it's called a home value estimator to figure out how much equity you have. And then if you have a first mortgage, so we would subtract that, and that would give us the amount of equity that you have in your home. We have a few different options. We can do a 5, a 10, or a 15-year home equity loan. Those rates, differ. If you went with the 5-year, you'd obviously pay less than the 15-year. We also do a home equity line of credit, which is based off prime, whatever prime is, and I believe it's 7 and 7.25. Somewhere in there. We'll say anywhere between 7 and 8%. I don't know. But basically a home equity line of credit, it's kind of a great thing because it's a big line of credit that you have. We can go up to 80% of your value of your home. We would take out how much you owe on your first mortgage, and then between the first mortgage and that, we can go up to 80% of the value. And you wouldn't, let's say you were buying, you're remodeling your kitchen, and you say, Cheryl, I got to pay the contractors $10,000 right up front. So you could take and withdraw that $10,000 from your line and pay them, and then at the end, or during the construction phase, if, I need another $5,000, you can withdraw that from your home equity line of credit. Whereas a fixed rate home equity loan, you're basically getting the full lump sum right up front. So you're not you're paying interest on the whole loan amount, and that's going to sit in your account, or you're going to spend it on whatever you're doing. Whereas a line of credit is you're just withdrawing however much you need, and you're only paying interest on the value, on the loan amount, on the what you withdraw from it. Does that make sense? Go ahead.
What can home equity loans only be used for things such as remodeling your kitchen or adding on a garage, or can they be used for a wider variety of things?
You know, I would like to say that they can be used for a wider variety of things. And some people do take a home equity loan out to purchase another home, maybe an investment property or a cabin. So it can be, we're going to ask you right up front what you're using the money for, because that's something that we have to know. But some people do a home equity loan to buy investments. I mean, so it's kind of whatever you want, but we're going to ask you what you're using it for.
For instance, if you already have a home, but you want to buy another home for investment and have that rented,
Right.
so you can use that.
You can use the home equity loan for a down payment to purchase the new investment property. And we can finance an investment property. So the interest rates are higher on investment properties and on second homes. Just so you know that they're a little bit more riskier, so the rate's going to be a little bit higher. But yes, you can take the equity out of your existing home to put down on your investment property. Oh, what's that? Prime is 8% today. I guess I was right. 7 to 8%. Wow. I don't think it's been that long in a long time. Wow. What other questions do you guys have?
How was the male employees credit union able to compete with your home mortgage loans versus all these other different companies? We've always purchased our car loans through the credit union over the years, always got some really good rates. Are you able to compete favorably with
We
so
do.
many different companies out there?
We do. We actually do compete very well with our personal loans, our car loans, and our first mortgage loans, and our home equity loans. I was just told by a member the other day that our mortgage rates were the lowest in town. I don't shop our rates, so I don't know that, but I know that we're very competitive with our interest rates. And car loan rates, we're kind of, God bless you, we're kind of looking at a new car, and the dealer's rates, holy smokes, they think they're good rates, but I know we just started an auto promotion, I think today, I just got that email, and those rates are really good rates. But yeah, make sure, because when you go to the dealer to buy a car, they're going to try to talk you into financing through them. But definitely check us out, because I did that. My mom just bought a new car, and they were telling me what rates were, and I brought up the credit union, and we were probably, the financing guy was shocked at how low Mayo Credit Union's rates were. So definitely check us out. Go ahead.
Talking back, or just kind of circling back to the rates we were talking about and such, and the credit union doesn't fully necessarily set rates, like with homes, for example. Like you hear things in the news, like with the Federal Reserve. Can you talk about how that process and like how just how we don't necessarily the government kind of sets the rates and we have to follow suit. Can you
Yes.
comment on that process and such?
Yeah, just like we said, that prime is up to 8%. So our home equity loan, our line of credit is based on a prime rate. So, and that's at 8%. So for a home equity loan, I have a home equity line of credit, but I don't use it. So I'm not paying any interest on it. It's sitting there. The rate is 8% today, but I'm not paying any interest on it because I don't have a balance. And I think it's always good to have a home equity loan line of credit out there. You just never know when, oh, hey, I want to do something. I want to make a big purchase, and I don't have the money yet. That's what it's there for. We haven't used it, but I like to have it sitting out there. As far as interest rates go for our mortgages, basically, the Federal Reserve sets those rates, and then our mortgage company, they set their rates and their points and things like that. That's kind of how all that is calculated. Sure. Oh, a pre-approval is a good thing. Your realtor will love you. So a pre-approval letter, basically, you're filling out the application. You're giving us some pay stubs and some W-2s, so we can just calculate your income and make sure that we're both on the same page. And then we're pulling your credit. We're doing a hard pull on your credit, and then we're giving you a pre-approval letter. So that pre-approval letter is good for 90 days. If you don't find anything within that 90 days, we're gonna have you fill out an updated application, because a lot of things can happen in 90 days. You could switch jobs, things like that. So we'll have you fill out a new application if you don't find a house within that time frame. But your pre-approval is gonna tell your realtor, when you hand it to them, it's gonna tell your realtor that you have checked your credit and that the lender has looked at your documentation and that you can afford to buy this house. Sure.
What about how long you can lock your interest rate?
Absolutely. So we can do up to a 90-day rate lock. Now keep in mind, doing a 90-day rate lock, you're going to pay a little bit more just because we're lengthening out that time frame. So the rate locks can go 30, 45, 60, and 90. The one that you're going to pay more for typically is the 90-day. And a lot of people that do the 90-day, they don't close until 90 days are people maybe that they're building a house and they know that they're going to be done within a certain amount of time frame. So that's why we're doing a 90-day lock. We don't do them very often, but we do them.
You don't do them very often for the 90 days?
For the 90 days, yes.
But
But
you
we
do
do, we do the,
Shorter periods.
absolutely, yeah, yep. Sure. Oh. Sure. Does anybody have any more questions?
I've got a question, but it's probably more related for a real estate person than mortgages, but I had some friends that I've worked with, and they've retired and they purchased a townhouse. And the townhouse is fine, but they said they'd never recommend townhouse because something to the effect that if there's anything needs to be done in these townhouses in their little community or whatever,
Right.
if something has to be done, everybody has to share the cost. And now some things they don't argue with, but I've had some friends that said that we've had some other residents in similar townhouses in our area, and they had to fix this, that, and the other, and we all have to chip in and pay for it. I don't know if you got a sense for that, or,
You know, a little bit. So with a townhome or a condo, you're paying an association fee. So you're basically paying in each month to the association. And sometimes that fee is, I don't know, anywhere from $100 to $300 or $400 a month. Kind of depends upon, you know, where it is and what the situation and what it all includes. But you know, if you're in a condo or something where they're all connected and you have to replace the roof, that is something that they, you know, that all of the homeowners would participate in. Yes, yep. And same with a townhome. I mean, if there's an association, you normally would have to check with the association to see if you can do this, that, or the other. But there's definitely rules and regulations that go with
so
those.
the condos or the townhouses, you have to pay the association fee, so you're kind of locked in on some of those.
And with anything else, you know, that association fee is probably not going to come down. It's probably going to continue.
Right.
And that's too, when you're purchasing, if you're purchasing a single-family home or you're purchasing a condo or a townhome, what you may be pre-approved for could be different, because on a single-family home, we're considering principal, interest, taxes, insurance, PMI, and possibly flood insurance if you need it. But on a condo or a townhome, we're doing principal, interest, taxes, insurance, PMI, flood if you need it, and the association fee. So you'd probably qualify for less if you're purchasing a townhome or a condo because of that association fee.
Oh,
And you know, some, like I have a townhome, I don't pay an association fee because we're basically two sets of homes. We share a common wall with our neighbor, and then the set next to us also shares a common wall with their neighbor. So we elected not to have an association fee. So
oh, that's good, huh?
yeah.
I'm surprised you got it passed.
All right, exactly. And we pay for our own snow removal. We do our own lawn work,
Each one?
each one. Yep.
That's good.
Yeah, I like it.
Or I can just still do it myself or whatever?
Exactly.
Wow.
Yep. It works out well. And we did have storm damage a few years ago, and we both had to pay for a new roof because we got the storm damage. I mean, insurance paid for some, but not all. But yeah, we both agreed to put a new roof on. So it's something that you have to be agreeable with your neighbor if you're sharing a common wall.
Right.
Yep.
Villas would be considered a townhouse or a condo. You see a lot
Yep.
of these communities up in the Twin Cities metro. There's all these villas for, you know, retired people.
Yeah.
Scale back.
Yeah.
That's the same concept there too, right?
Same thing.
Villas is a townhouse, condo, the association fee.
Yep. Yeah, same thing. Any other questions? Well, okay. There I am. There's my phone number, my email address. I am happy to help answer any questions. I have a couple of colleagues too that would definitely be able to
I
help.
was going to ask you, how many do we have that own home mortgages here? in
There's
Franklin?
3 of us.
3? Okay.
Myself, Donnie Pierce, and Dennis Schaefer. Thank you. Boy. Yeah, and we've all been in the industry for a while, so we've been around the block a few times. But feel free to drop us an email, give us a call, make an appointment, come on in and visit with us. We'd love to see you. We'd love to talk to you.
Oh, we got one last
Yeah,
question.
absolutely.
Our son that lives out in California, was purchasing a home, and he worked through we got some rates from a credit union here for home mortgages and stuff, but he worked through the builder, new construction. I had a block in my mind that said that's probably the worst rate you're gonna get is through the builder, but I don't know. He checked around, we told him you gotta check around and
Yeah.
see what the home mortgages are, et cetera. And he ended up, I think, going with the builder, but just off the cuff is, builders probably, do you have a feel, would they offer probably the lowest
You know,
interest rate? Or do they, for somebody that's willing to buy new construction, they're more reasonable, or?
sometimes the builder can be, sometimes they can be a lot higher. I've seen it, and people want to come through the credit union. And sometimes their builder will try to put roadblocks in the way and won't let them come through the lender, but it's hard. There's developments out there, Florida and Arizona, where their builder has a specific lender that they want you to go through. And a lot of people just do it, but some people don't, and we've had successful closings. And I believe that our interest rate is lower. Very competitive.
So some of the builders will try to block that. They don't want the
They
home
just,
buyers to
right,
work with anybody else.
because it's easy. I mean, it's easy for them to walk into their lender and their preferred lender and get everything done through them, their preferred title company, get everything done through them, and they don't have to worry about it. So, it's all in what your comfort zone is. We work in all the different states around, so we can do a loan just about anywhere. I don't know, Hawaii and Alaska are questionable, but pretty much everywhere else. Yeah. Yep. And we'd love to help you. Check out our website also, because we have some great certificate specials going on right now, really good. And we just announced that auto promo, and that seminar is coming up here next. So thank you all for attending. I appreciate it. And any questions, feel free to give me a call. Thank you.
Thank you, Cheryl.
Yeah.